Welcome back to Take 10, Lisa Wiles.
Corey Frills with the Mortgage Gallery.
And what we try to do is take 10 minutes in a very concise format to help you win one more deal or educate you or make you the smartest person in the room.
That's right.
Let's talk about the market.
Let's do it.
Like we do.
Today, 30-year fixed says, Optimal Blue says 6.183. I'm calling lenders do be cutting right now because mortgage rates have drifted slightly higher.
Yeah.
And yet what people are actually locking is staying about the same. So we're getting squeezed is what that means, guys, is competition is stiff right now in the mortgage world, and we are getting squeezed on rates. So anyway, government shutdown's over. Which is the big news, right?
Wait, what was it, 47 days?
It's the longest in history. Yeah.
I love that.
The second longest in history was 2018 under same administration.
Super efficient government.
We love it when they're shut down forever. So we'll talk about tactically what that means, but for a second, I'll hit on the market side of it. We've kind of been in this flat, kind of drifty trading range with mortgage bonds and mortgage rates for a little bit because there hasn't been any data. So the data usually tells the bond market, how to go. Like, do rates go up? Do rates go down? We haven't had that government data yet. We will start to get it on a delayed basis.
So are they going to be basing decisions off of data that's a month old?
They
for
will,
instance?
in fact, because.
But wouldn't the mortgage bond market understand that data is old data and they can't rely on that?
The mortgage bond market, yes, but the Fed, for some reason, maybe not. We'll see. Yeah.
Okay.
So one thing to look at, the Fed's next meeting is December 10th. I think there's like a 55 to 65% chance that they cut in that meeting. But they're not going to have November's data until like maybe the 12th after that meeting.
But with that low of a chance for the cut, that's why we're not seeing any relief in rates right now.
That's exactly right. So bond traders are looking forward to that December rate cut, and they're saying, are they going to cut? Are they not? And it doesn't look great. I mean, it's not bad. Just 6, 7. Okay. We got to move past that.
Sorry.
All right.
I can't. It's so dumb.
Okay. So what else does the government shutdown mean for USDA?
So they have not even we as lenders have not even been able to upload packages to USDA. So there's not even a queue of packages sitting there waiting on them. It's literally as soon as it opens, lenders are going to be pushing things through and it's going to bottleneck.
Yep.
So that lag time probably nobody's working overtime to catch up.
No.
I'm guessing they're going to be a month or two out on decisioning.
I remember in 18 them being 2 and 3 weeks out when they were open.
The whole time.
Yeah. So, I mean, it's going to be tough to get a USDA deal done. We'll keep an eye on that and update you as things go, but you need to have alternatives.
So that's what we just why, if you're trying to list a home that's in a rural housing area and you're trying to get more eyes on your listing, we have other programs and products that you can make 100% loan out of. One of them through FHA, actually, it's 100%, but you don't have income limits on it.
That's right.
Rural housing has income limits.
Yep.
So
THDA
you
has
can even
income
get around
limits.
that, right? And it doesn't have to be located in that rural area, but until rural housing is back, that's a really good way to still be able to advertise 100% financing available on this home, just until the government can get caught back up.
That's right. So we'll keep you in the loop on USDA.
And we'll also put into the notes maybe somewhere
alternatives.
Some of the alternatives so you guys can utilize that information and push forward on your marketing.
Let's touch on the 50-year mortgage because that broke the internet this week.
What a joke.
Yeah, it's not going to happen. It's a bad idea.
I mean,
just to shortcut you. Don't want to tell you what to believe, but
so
you should believe
so if you spread something out, that amortization that long, literally none of your payment is going towards principal balance at all. You may as well have an interest-only loan.
That's right. And we do, in fact, have interest-only options. So let's talk about those.
Okay, and
right?
it does make sense sometimes to use an interest-only loan.
Maybe.
What if you
right?
get paid in big chunks of money, right?
Yep, that's right.
What if you get big bonuses at the end of the year,
Yep.
but the rest of the year is kind of skinny and you have to work off your base? So you keep that monthly payment low using the interest-only feature. And then when you bonus at the end of the year, take a large chunk of that money, throw it down on the principal balance, and your monthly payment will drop because you're only paying interest on what you owe.
That's right.
Right?
And that works really well with like a home equity line of credit, right?
Same.
So like but if you look at like the last time I priced between a 30-year fixed and an interest-only loan, there was like a 1% difference in rate. So like let's say a 30-year fixed at that time was at 6 and then the interest-only option was at 7. The payment on the interest-only loan was the same as the 30-year fixed because of the difference in rate. And they're going to price up the 50s at a higher rate. So the actual payment savings will be minimal to none.
Do the math, folks. Do the math. Or let us do the math for you.
I really think it's just – I think it's the administration trying to come up with something to solve for housing because everyone knows it's a problem. Everyone's telling them it's a problem. They kind of floated out the 50 and everybody was like, terrible idea. And they're like, you're right. We didn't mean that. What about portable mortgages? And that's the next thing that everybody's like, no, that's not going to work either.
Somebody said, I think maybe it was Germany or one of those countries over there has a 100-year loan. So I don't know. It's passed down from generation to generation. Wouldn't you like to inherit a loan from your forefathers?
Well, and a lot of them do, but your rate resets like every 18 months.
That's fun.
Like the United States is one of the only markets in the world that has a 30-year fixed rate mortgage.
For the entire.
You go to Europe, it's like 2 years. In Chile, don't ask me how I know this. I met someone at an airport bar, so I know it's true. In Chile, they use a different currency that's adjusted for inflation for their mortgages. And so it trades up and down with inflation. So we have a great thing here in America with a 30-year fixed anyway.
Right.
50-year, it's
do the math. The math probably won't.
Act like you never saw it. It's not going to happen.
Math won't math.
Okay.
We have some fun things coming up.
We do.
Business planning. I mean, it's time. It's Q4. We have to set the path for what we want 2026 to look like, and we need to go at it with intention.
That's right.
And with a plan, and we are here for it. And so some of the ideas we're kicking around, and maybe we would love some of your feedback on this, is we want to address 3 things mainly. Work-life balance. I think that is something that is relevant for everybody. And we want to dig deep in on that for a more holistic picture of what this looks like as a true career, and how do you also have a family and free time to do things you love. The other one is, how do you make your income consistent income? And how do you plan for the downtimes, and how do you manage the uptimes?
That's right.
Without running out and buying a G-Wagon or something.
And we're going to try and dig into the psychology of money on this. So it's not going to be like, put 10% retirement and 59.5 you can blah, 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 blah. We're not doing that. Nope. We're going to talk about actual behavioral finance.
And then the last thing we are thinking about is scaling without losing control of the business and without your business taking hits as you scale up. Because as entrepreneurs, as we all are, at a certain point, you're at capacity and you have to scale. So how do you do that in a smooth way? We can speak from our own experiences, and also we're going to bring in some really good information.
That's right.
That's tactical.
Yeah. So if you hate all 3 of those, let us know. If you like any of the 3, also let us know. But our focus is going to be on the entire person.
Right.
And we're not going to tell you like, hey, if you make 30 calls a day, you can blah, 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 blah. We're not doing that.
No, because we don't want to do that.
No, it's not fun.
Nope. So. We're probably at 10 minutes.
That's it.
Yep. So
we work weekends, after hours at themortgagegallery.com. Shoot us an email to that inbox, and all of us watch it 8 to 8 days a week.
That's right.
That's right.
Appreciate y'all.
See you next week.